Yo, what's up everyone? Yep, we're back. Another live stream. Good to have you here. Good to have you here. It is, however, going to be a short live stream. I have 30 minutes in my agenda to do the analysis, and actually there's a lot of new information compared to the morning update, as I spent a lot of time this morning on the chart. So good to have you here, and let's get this started, right? Because I don't have too much time for all the chat and Q&A, so I think it's better if we just go straight into the analysis, and then we have some time for chat and Q&A afterwards, right? Afterwards. So let me get this sorted. Uppala, there we are. What's up, Eric, Sam, Lucian, Flotti, Oconte Studio, Mark, Bulent Ozdemir? Welcome, everyone. Hopefully someday I'll be as good as you in Elliott waves. Matter of time, my friend, matter of time. I guess that if you see me doing Elliott waves, and you don't really see the live analysis usually, but it goes very, very quick. So if something happens, there's immediately thoughts of something else. But, you know, matter of time. I mean, I remember a couple of years ago how I started and grinded. I still have all my notebooks with all of my notes on Elliott waves. And sometimes we go into a random chart and I'll see analysis of years old. So, you know, keep at it, keep grinding. And it's not that my level of Elliott waves is out of reach. Not at all, right? Not at all. It's just a matter of time, right? Determination. Okay. What's up, Daniel, Gluka? Welcome, guys. Okay, let's jump straight into the analysis because I actually have quite a lot to talk about. You can see all of these folders here. So this one up till that one. And these folders include new stuff. Now, as you can see, got a couple of triangles. So I got inspired by Mr. Flotti here. What's up, Mr. Espresso, as that's his alias. And we were chatting in gold earlier today, and you know, it's an annoying range and all of that stuff. And then Flotti dropped a couple of triangles, and I was like, oh, that's interesting. I'm going to look at some triangles as well. And that is what eventually resulted in having 5 triangles plus a little variation of the WXY. Then I also have some polyline folders here, right? Polylines, polyline simple, green and red, which is based on probabilities. So we have a lot to talk about. In other words, so let us get started. We start with what we already know, and then we get into all of this new stuff, right? So we are 9 minutes into the stream. I do not have water, but I don't need it. We're online for 30 minutes, so yeah, that's fine. I'm really running on a tight schedule. It's just that I spent so much time this morning on the chart that the rest of my schedule just like cut delayed, you know what I mean? So anyway, this is of course something we continue to keep an eye on here. 1, 2, 1, 2, 1, 2, 1, 2, and then eventually you get your 3, and then 4, 5, 4, 5, 4, 5, right? You have a typical impulsive structure here, starting with a bit of a grind, bit of a diagonal structure, which is a multi 1, 2, and now you get your 3, and then you look for a multi of 4, 5. Which eventually means you are looking to end an impulsive structure. Now, in this particular case, you have a sideways range here, labeled as a couple of 4, 5s, right? 4, 5, 4, 5, 4, 5, 4, 5, etc. Currently, we're then working on that red wave 4 in this particular scenario. Preferably finishes after the 18th of February, which is today, and we still look for a 5 to the upside. Invalidation, 74.2, but honestly, if you move below 85, not great. This is your target area. We have hit this target area. First time was here, second time, third time. We've basically been ranging on top of the 2, 3, 6, right? So that is a bullish scenario. Yeah. Bearish scenario is what you see here on the chart, right? You always need a bearish scenario. It just doesn't have the highest probabilities yet, right? That's Elliott wave. So 1, 2, 1, 2, 1, 2, 1, 2. So basically we skip this 1, 2 here for another 4, 5. We take that one away and we go to the triangle. Now, if you remember correctly, back in the day, September 2024, it's not that long ago, we counted this structure as either a triangle or you have to somehow count this as a 1-2, right? It's basically either or, depends on local market structure at a later stage. Do you add a 4-5? Then you need to add a 1-2. Now in this scenario, we don't. So here we then have our yellow finished count. 1, 2, 3, 4, 5. Ended at the high, right? Now in this particular scenario, we then have a multi 1-2 to the downside. Now this is, of course, then your bearish scenario, right? So 1, 2, 1, 2, 1, 2, 3 down. What lowest probabilities is, first of all, this wave 2 is 11 times longer than your wave 1, which is low probabilities. This green wave 1 is a lot longer than your yellow wave 1. You can see here, it moved way beyond the 1-to-1, which would be the equal area, but it moved probably 1. Yeah, so the 1.618, right? It's quite a lot further for the second wave 1. And not to forget, right? Your ideal multi 1-2 is what you actually see here, right? It is where your wave 1s are either quite similar or every lower degree wave 1 is a little bit shorter. And your wave 2s preferably are quite similar or a little bit shorter because you talk about lower degrees. But this wave 1 is a lot longer than this one. Now, of course, this wave 2 is incredibly short, right? And then you would have a diagonal in 1, another 2, and then a 3 down, which means this 2 is going to be quite a lot bigger than this one again. Preferably, though, if bearish, this 2 is not yet finished because this high was made before the 382 fib time, comparing 1 with 2. Preferably 2 is ending after the 382. Right, so preferably we are then not yet finished and we follow the bold polyline with the dotted one being an alternative. But still, it's, you know, it's difficult to be bearish. I do see messages. I even received a comment this morning, which ended up in the spam folder, I noticed. I don't know, probably because of one of the banned words. But about like people being super bearish. And I mean, it's you know, it's perfectly fine to have a bearish scenario, but from an Elliott wave point of view, right, you have market structure that is still very much intact. This move to the downside counts best as a 3 wave compared to a 5. 2 is 11 times longer, right? 1 is longer. This one is a lot longer in time again. Like, you know, it's not, if you compare this multi 1-2 with what you have over here, there's a significant difference in how this looks versus how this looks. Now, and the same is true for this. I mean, look how nice. This is a great multi 1-2 setup, right? You have a 1, you have a bigger 2, quite similar 1, shorter 2, 1, shorter 2, 1, right? It's very nice. It creates that diagonal structure. And I do know back in the day, people were also looking at a diagonal here, right? But then we push up and it's a multi 1-2. So it just doesn't have the highest probabilities. Now, if you lose 85, then yes, right? That's the moment when we're going to switch to bearish scenarios, bearish market structure, and that sort of stuff. All the other, like the rest is just risk management, right? It's not like, oh, we go full ham into this range here and we look for all-time highs, 100x long, and you know, it's all risk management. We know that if you lose 85, that's not good for the bulls, right? So that's an invalidation, basically. You don't really want to move below 85. 85 is the maximum area of support. But from an Elliott wave point of view, there's no reason at the moment to give the highest probabilities to bears, meaning over 50%, right? If you look at the chart, can you give 80% to the like 90% to the bears, 80%, 70%, 60%? Right? How much percent would you give the bears versus the bulls? Now, we are looking to eventually top, right? Absolutely. And see price move down. But with the current price action that we have, we can't give over 50% to a bearish scenario. We would first need to take out the 91K low, puts a little bit of probabilities in a bearish basket, right? Then we need to, then we need to take 89. Again, little bit in the bearish basket. But this is the big one. It's the 85K one. If you lose this one, then you likely move back into the 70s and you're going to retest the top of this range, which in all honesty would be a great area of support, right? Very likely this range, if you do fall, is going to be your first area of support. And then possibly you look for continuation to the downside. But this, of course, is a very nice opportunity, not gonna lie. It's just that at the moment, from an Elliott wave point of view, it doesn't have the highest probabilities. Now, everyone knows we are completely neutral here. I don't care if the market goes up or down. We trade at 100K or 10K. Yeah, it does not matter for me. I trade anything at any price. And my personal trading window doesn't even have the price on the side. This is deactivated. I don't use price. I don't use time. I only use the chart and my technicals. And from an Elliott wave point of view, purely theory based, this has lower probabilities than this. Anyway, so that is to the comments earlier this morning, which weren't bad comments. It's just the explanation of so convinced for the bears, but I don't know where the convincing comes from. Anyway, let's get into the triangle scenario. So I have 5 different triangle scenarios that I'm going to run you through. Sounds like a lot, is a lot. But then with the polylines, things become clear. First of all, we have this one. Now, in this case, this is the top of your 3. You're looking for 4 and 5 to the upside. In this scenario, we have a double zigzag in A, B, C. We look for D, E continuation up. What lowers the probabilities for this triangle, however, is that your wave A has a double zigzag, right? So it's a W, it's an X, and then a wave Y in a wave A, which is very rare, right? Wave A preferably is a simple structure, not a complex structure. It is very, very tricky to count an A, B, and this is a C towards the downside, because if this is a C to the downside, it means that this has to be a wave 4. But where is our wave 2, right? You can see a very clear big range, but we can't see a nice range over here. Preferably, we would have seen a 1, bit of a bigger 2, you get your 3 down, then a bigger 4 and 5, right? Get a bit of a nicer impulsive structure, where this is 4 and we can clearly identify a 2. If this is a 4, where is our 2? That's then the question, right? So this looks better as a 3-wave structure, which then results in a zigzag, meaning zigzag here, which leads to a WXY in A, lowers the probabilities for this scenario, which is why the polyline is orange. But yeah, in this case, though, you have your move up, sideways range. You look for another move up in D to 105. Reject at 105, come back for E. Very likely the point of control of this range is going to be your support for your wave E, which then means that this is the perfect swing trade at that moment in time. And possibly, of course, the other way around, which is higher risk because it is against the trend, would be this, because you're looking for a wave E to the downside. Mess around a bit with the RR, but you know what I mean, right? So it's interesting. It just doesn't have the highest probabilities to have this triangle if you do move up. Second triangle is what you see here on the chart. So this is where we count a triangle from this high to the downside. Now this triangle is either your wave 4 in red, this one, after which you continue to the upside. Alternatively, you're going to count a W, X, and then a Y triangle, and then continue towards the upside, right? It's the same thing. It's the exact same price action. So you're just looking at this triangle. So we have A, B, C in A, B, C. Preferably D makes another high, E. And I'll explain why. So here we have our ABC in A, ABC in B, and then we have complex structure in a wave C. Now, just a bit of theory about triangles, right? Triangles are definitely not as straightforward as you may see sometimes in on the channels of analysts that do patterns. So, of course, a triangle is relatively, quote unquote, easy to recognize as a pattern, right? Just two converging trend lines, and people talk about a triangle. But from an Elliott wave perspective, there's a couple of rules and guidelines that are incredibly important when we talk about a triangle, right? And I think a great video about triangles, go to the Elliott Waves Beginner's Guide. This website, this is the LINKTREE. You can find it in the descriptions. Go to Elliott Wave Beginner's Guide and go to triangles, because I have a couple of examples here, right? These are the triangles. No, where is it? Yeah, here, contracting triangle, running, barrier, expanding. I also explain which other scenarios have a higher probability than a triangle until wave D is in. So triangles are not too common as they're for wave 4s, they're relatively common, but they tend to be pulled too quickly, right? There's generally other scenarios like a flat or a WXY that have higher probabilities. So, but that's just some information. Now, about theory. Every wave in a triangle has to be a zigzag family structure, either simple or complex. So a 5-3-5, or a WXY double zigzag, or XZ triple zigzag, but that's very rare, right? Preferably in a triangle, the volume moves towards the downside as the triangle is forming. That's a preference, not a must. It's a guideline, not a rule, right? And then in a triangle, preferably the ratio between waves, right, is decent. It has to be said this wave B is incredibly short, right? Talking about ratio, just look at this B compared to your wave A. That's sometimes the way it is. C is already a lot better again, right? C compared to A, and then preferably get a bigger D. Anyway, in this, no pun intended. So the reason why preferably D would not yet be in this triangle is because if we end D here, and this is E, right? And then you get the green polyline for continuation, end of the triangle, and up you go. This wave D is very difficult to count as a simple structure. So in a triangle, I forgot to say, only one of the waves is allowed to be complex, right? As a WXY, WXY-XZ. The rest are preferably, or should be simple, right? So one wave complex, the rest simple. Most common wave that is complex is wave C. It is uncommon for D, very rare for B, incredibly rare for A and E. So if any of the waves is complex, then preferably that happens in your wave C. Now in this case, wave C is the complex structure. Nice, right? But what is wave D? Can we count wave D as a simple ABC? Well, we can, of course, count this maybe as an impulse. But then what's this? Is this a clear impulsive structure? Maybe an impulse is hidden in this, but what makes it difficult to count an impulse is all of the overlap. Look at the overlap, right? So overlap, right? Overlap, overlap. There's consistent overlap. And preferably in an impulse, you of course see a bit of a gap, right? So there's no overlap anymore. And if we want to count this as a 1, and this then as a 2, and then you have your 3, and then a couple of 4, 5s and whatnot, then if this is the high of your 2, right? 1, 2, 3, 4, 5, right? Then you have overlap between your 4 and your 2. Now, this is not a rule. This is a guideline, strong guideline as per Elliott Wave International, that your wave 2 and 4 do not overlap. In this case, they do overlap. So it's not preferred, right? And alternatively, you have to go in some sort of expanding diagonal structure, but expanding diagonals are very rare. So it's a bit tricky to count a nice impulse, and that is why in this scenario I also have the bold polyline, which is the green one here, where then you have A, B, and you look for a C. B is of course long in time compared to your first move to the upside, but that's not the first time that we have seen this, right? That's a great example. Another one here, sharp down, long sideways, next one down. So something that we have to keep in mind. So here you would then have A, B, C, come down again, continue. Alternatively, you just continue. It very much depends on D, because D has to be a 5-wave impulsive structure that then ends below your B, because that's an invalidation actually. There you go. I will summarize these scenarios as well in a little bit. Okay, next up. A variation. So here we then have A, B, C is not yet finished. So instead of C being finished here, not yet finished. So you have diagonal B, C, right? A, B, C in C, and then you get D, E continuation. I'll make it very simple once we get to polylines, because you don't have to remember all the triangles. In this case, C could be complex. Like you can maybe get a WX, and if this goes straight down, a wave Y or something in there. Alternatively, see a simple diagonal A, get a B and C, but preferably your B is not yet finished because of time. But by all means, if we do this, then preferably it's complex WXY. And then you get DE, continue to the upside. It's simple. Next up, A, B, C, and W, triangle. A, B, C, D, E, go down in your wave Y. Now in this scenario, we are then looking to finish D, move up in E, and then come down, right? In this scenario, wave B is the complex wave, which is lower probabilities because most commonly it's C, uncommon D, rare B, very rare AE. And then wave C is question mark. If B is complex, then what is C? It's the same question as earlier. Can we count an A, B, C in here? Yes or no, right? Otherwise, you have to do A, B, C to finish C here, get D, E, and then come down. Final triangle, which is exactly wait, is that what I just explained? Kinda. So here we then have our W, zigzag, triangle X, wave Y to the downside. A triangle in X, by the way, of a double zigzag is not all too common. It's like 7 and 6% in an up or in an up market, bull market, or a bear market, based on the statistics of Swannell. But they do appear. So in this case, you then have your A, you get your B, C, D, E down. B in this case is complex, lower probability. So if we look at the triangles in a second, final scenario, right? It's for me, having so many scenarios is very rare for me to cover this. I hope it's not too confusing. Probably it is, but I will make it very simple. I just want to first explain the scenario and then we make it very simple. So here we then have our 3. We look for 4 and 5. A, B, C, W, X already finished. And then we have the wave Y to the downside. Very simple structure. It's a double zigzag. So, I mean, it's a complex zigzag, but it's simple. It's not a triangle. So you have a diagonal A, preferably B is not finished, and then down. So preferably the bold polyline, right? Higher probabilities than the dotted line. And that is because this high is made before the 382. Preferably B ends after the 382, taken from the start to the end of A. So preferably, in other words, B wouldn't yet be finished. There's the potential for a flat and then A, B, C. Rejo spoke about this earlier this morning. A, B, C, and then move to the downside, which is basically what this represents. Still a little bit of support, move up, and then you come down. Now, let's talk polylines. Let's make it simple now, because we have a lot of theory, a lot of waves and triangles, and what the fuck, I can't remember all the triangles, which I fully understand. So let's just put them on the chart one by one as a summary, and then get to the polylines, which basically show you the price action without all of the stuff and the fluff. First triangle, DE up. Lower probabilities. Right? This one, lower probabilities because of a double zigzag in A. Then we have this triangle. A, B, C, look for D, E, continuation. Preferably D is then not yet finished. C is complex. Perfectly fine in probabilities. That's why it has green polylines, but preferably your D wouldn't be in yet. Then we have this one, also good probabilities. A, B, C, D, E. C is complex, right? In this case, you would then take out the low and move up for your D. Lower probabilities, W, A, B, C, D, E, X, Y. Lower probabilities because B is complex, impacts the probabilities. And then finally, W, zigzag, A, B, C, D, E, Y down, B complex, lower probabilities. Now, if all those polylines had a color, right? If I put everything on the chart, you can see that there's many colors on the chart and you have no idea what's going on. So what I did is I have a couple of polyline followers. First of all, this is what you just saw. All of the scenarios I just spoke about is this. These are all these scenarios together. And it's interesting to look at the confluence between the scenarios, because that's interesting for trading, of course. And what you can see is that all of the lines, higher probability, get a bounce. Now that's the most important part. It's what's happening here. Because depending on a bounce, you get the rest. But the bounce to the upside, is it a 5-wave impulse? It is a zigzag, right? What's the strength? What's the volume? we'll have to wait and see, and then we can eventually get into specific polylines. But it is the higher probability bounce here that matters the most before you then get to a scenario. Now, to keep it simple, the green lines are your higher probability scenarios. The red lines are your lower probability scenarios, as explained in the analysis just now, right? With B is complex, etc. So you can see the green price action versus the red price action. And to make it more simple, I subdivided it. So this is your green, higher probability. And what you see here is then, of course, looking for a bounce. And depending on the bounce, we know what's up, right? And this is your red, lower probability. But even in red, you can also see that these are lower probability scenarios, but even in red, your scenarios preferably still get a bounce, which is most important for trading. So if we then zoom out, the highest probabilities remain higher for the bulls on a 4-hour daily time frame, as long as you don't move below 85. There's literally no higher probability bearish scenario. So take out 85, yeah, we turn bearish, right? That's when we turn bearish. Take out 91 here, little bit of probabilities to the bears. Take out 89, bit more probabilities to the bears. Take out 85, that's a problem. Bearish scenario, multi 1-2. Alternatively, just a very big WXY. So you just have ABC, this is your X, and you get a really big wave Y to the downside, which is basically a variant of what you see here. W, all of this X, and then you get a big ABC down in a wave Y, and then up. I would actually favor that, to be honest. Now that I'm thinking about it, well, it wouldn't be bad. But again, first, before we can give it the highest probabilities, we need to lose some significant levels. And then with regards to the polylines, you can see that looking for a bit of a bounce, green, or at least everything together. You can stop the stream and of course screenshot it. But everything together, probabilities are higher to still look for a bit of a bounce and then take it from there. Simple. Green higher probability, red lower probability. Highest probability. Right, focus on the short term here. And then red lower probability. So that is what's going on locally, right? And the key of the story, or the point that I hope to get across in this analysis, is that analyzing too far ahead in time does not always make too much sense. So we have the bullish scenario, we have the bearish scenario. Arguably this one, if you get a bigger WXY, is also bearish. But most important is that locally, right, from a trade management point of view or looking for positions, the probabilities are higher that we still get a bounce. Even if we take the low here, there's still some support. Would still be interesting to look for a bounce. Now, depending on that bounce, we get to what comes next, right? It's very difficult to predict what then comes after. Do you just continue? Well, yeah, if we get a high amount of volume, wave 3 price section, multiple 1-2s over here with bullish CVDs, we will be the first to say, okay, let's, up we go. It's time, right? We're done with this range. It's time to get out and new all-time highs. If, however, the move to the upside fails, becomes a 3-wave structure and all that stuff, yeah, maybe probabilities change to take out the low. But short term, we are looking for price to get a bounce towards the upside, right? Unrelated to a specific scenario. But if we talk about the higher probability scenarios at the moment, then this is one to keep in mind. This is the other one. So those are triangles. And then the WXY. Where preferably, of course, your B isn't finished yet. This is an alternative. The dotted line, preferred line, would be the bold line. And this is important support. And then, preferably up from there. If you lose this support, then back to the 70s we go. Ta-da. So that is what's going on. Of course, looks very complex, but yeah, it was fun though this morning to look at all the, oops, there you go, that's my alarm, to look at all the different triangles and Elliott wave scenarios. I went through it, of course, relatively quick. There's a lot to say in a short amount of time as I got to get moving. Yeah, covered all the triangles, covered the polylines, covered the highest probabilities, also probabilities polyline in green and in red. The short-term price action, higher probability to look for a bounce. What happens after depends on the reaction, which is something that we will, of course, analyze the moment we get it, right? Also, as you can see, I completely removed the, what did I call that scenario in the morning? I don't know, mega fantasy, whatever type of scenario where people are counting this as a 1, 2, 1, 2, 3. Look, this being a 1, 2 is super low probability. Doesn't make any sense whatsoever to count this as a wave 1 and this as a wave 2. Very, very low probabilities. And counting this as a 1 and a 2 and an up. I mean, 2 is very, very big, but at least we can possibly count this as an end in a 4 in a WXY. So at least there's a little bit of an opportunity there for then a 1, 2 and a 3 to the upside if you end 4 here. But it means this is not a 1, 2. And the reason the probabilities are low for that is because of the 886 touch, which is an incredibly rare target for a wave 2. Just does not make sense to count that as a wave 2 at the moment. So if you want to start a 1, 2 from one of these lows, let it be this one and just count 1, 2 like this. Or when the triangle is finished, of course, we get a 1, 2 locally, right? And then eventually continuation up. But I would really avoid counting this as a 1, 2. It's just very low probabilities. I saw that one online. I got it sent, and I was like, "What am I looking at?" You know. So yeah, that is at the moment what's going on. If we go to a 15, let's have at least a look. I really haven't really been too active here on the local time frame today because price action is incredibly messy. Like it's, I mean, just look at look at this. It's just yeah, the bear's looking for a multi 1, 2 of some sort. It's not ideal. It somewhat looks corrective. Anyway, or diagonals, ABC. The low time frame is just not as nice as the higher time frame. Resistance to the upside, daily naked point of control 97.1 to the downside 93.9. Those are two levels that I keep in mind. If you change the structure or at least move all the way here to like 97, multi 1, 2 here goes out the window, which basically means you either count this as a 1, 2 for the bears or this is an ABC finished. But yeah, very, very messy, very messy. You got to pick your battles. And I'm definitely not picking the 15-minute time frame at the moment as my favorite time frame. Locally here, we made a low, sweep the liquidity, potential here for a flat A, B, and then a wave is C to the upside. 1, 2, 3, 4, 5. We already took out the highs, but preferably you then actually 1, 2, 3, 4, get a bit of a 5. Keep an eye on this resistance. That's an order block. And that resistance is sitting between 96.6, 96.8, and above that daily naked point of control. Right, so your bearish scenario is a flat A, B, C, and then you trickle back towards the downside. Bullish scenario would that this be that this turns into an impulse, being then a wave 1, 2, 3, 4, 5 wave structure, corrective retracement, continuation up. So the difference basically is A, B, C, impulsive move down, 1, 2, 3, 4, 5 for the bears. And the bulls, 1, 2, 3, 4, 5, 3-wave retracement to the downside, right? Always a mess. And then you continue towards the upside to take out the high. So this retracement will be interesting. And if it is corrective to the downside, you bet I'm going to be part of any move to the upside. So, yeah, that's at least what I'm looking for locally if I only look at this side of the chart or only this side here of the chart, for example. So, yeah, Yeah, let's see. This, of course, has to be a corrective structure now. A, B, 1, 2, 3, 4, 5. C, zigzag, 1, A, B, 1, 2, 3, 4, 5, C is. And then 1, 2, 3, 4. Yeah. Definitely has a potential flat in there. So, yep. Okay. Good luck at 82. Yeah, we might get to 82. I mean, I'd be very happy to go to 82, but preferably if you go to 82, then just drop it to 76, 78, 76. 82 for me. I mean, is that where the range, the final range that closes the gap, I suppose, the daily gap? So it can be interesting. And I'm definitely interested in looking for lower. It's just that, we can't yet give it the highest probabilities, Like probabilities always change with new information. And if we get the right information, we'll get the right probabilities. But this is where long-term Elliott waves might not always be, of course, super useful. We know the levels. We know what changes if certain highs or lows or levels are taken with regards to probabilities. But that is why with the polylines, I very much focus on local price action and the short-term price action. Right? And depending on the short-term price action, as explained in the analysis, we will know what comes next, right? We'll just wait, observe the reaction, and we will know if we go down or we continue up, right? It's just, we don't have that information just yet. What's up, Davinder? What's up, Divine Hood? Cliff, welcome. Make sure to fill in the form. Eric Oku, what's up? Maybe a Band-Aid at the campus in Florida. Good luck with your tests, man. What's the best time frame for the most predictable probabilities for the day? For the day, if you're, I mean, I wouldn't really. I mean, for the day, arguably the 4-hour time frame, but that's actually too high for day trading. So for the day, 15 minutes is very often. It's like that's a nice time frame if you're day trading and you do day analysis. It's just that the lower time frames are not nice. It's very ugly, and I think many analysts will say the same about what's happening here. It takes a very long time, very ugly price action. It's just at the moment not ideal, but you do of course get 15-minute great setups. It's just that in this range there have been a few, but it's not great price action. So that's why I prefer to zoom out to the 4-hour, observe the 4 till locally we get more clarity, and that's when I jump back in to lower time frames. Kiwi, welcome. Good night in your case, because it's of course 4 a.m. or something. So I guess this is Solana, but what's up, Abdul? Welcome. I gotta go, so it's literally going to be one peak. I'm not gonna do any analysis on any coins because I don't have the time. I gotta move. So is this a double 1-2? First of all, probabilities were higher to move down because we touched the 886 here. We touched the 886 here. So probabilities were always higher to take out the low. So that was easy from a trading perspective. Is that all-time high, by the way? Is that all-time high? Yes. Yeah, I don't have the time to go into detail with this. So what's my, we only wicked, is that all-time high? Yeah. I mean, at the moment, we only wicked the all-time high. If we do finish a structure, then preferably it's not a wick. Preferably, of course, you close candles. If you look for 1, 2, 3, 4, 5, preferably wave 5 closes candles above 3 and it's not just a wick. So if looking for an impulse, preferably this is not a wave 5. But yeah, can this be a multi 1-2? Yeah, look at me. Here I am. Here I am. Almost touched 618. I don't know. If this is a 1 2 1 2 1 2, it's already a triple 1 2. Volume is not higher than here. You have a new low on lower volume. If this would be 1, 2, 1, 2, 1, 2, you want volume increase. This range is longer than that range. This range is longer than that range as well. This is your lowest degree 2 compared to these ones. So preferably it's actually a bit shorter. If this is a 1, it's longer than this. If this is a 1, it's longer than this. I don't know. It has a corrective feeling to it, but that's all I'm gonna say because I gotta get out. So I can't analyze things in detail. So that's just my thoughts. I don't know. It has a corrective look to it, zigzag family structure, but there's no sign of strength. You're moving down, right? So as long as you're moving down and you don't at least see an impulse up, it's basically short till hitting support, basically. So there's not a lot going on. Pull back in. Yeah, I know. I know. Yeah, I also always look at Bitcoin as well. So we've covered a lot of stuff in this live stream. I will put the timestamps in the VOD, but I have to go. I'm running on an agenda, and yeah. So thanks for being here. We covered the 4-hour time frame. We covered basically this range that we've been in for months, covering different triangles, probabilities, the polylines. Everything has been covered. A lot of new information compared to the morning update as well. So if you just jumped in, just make sure you go to minute 9 in this live stream, and that is where you will find the start of the analysis with all of the new jizz, the new information and stuff. So Livian, welcome. So Adam, what's up? Maybe a band-aid. Good luck with your tests, and to everyone else, make sure you trade safe, right? Tomorrow we have news, so tomorrow will be interesting to jump on a live and see what happens with the news. Let's see where we are later today as well. Very messy local time frame price action, but if we zoom out, things are a bit easier to read, which we have covered in today's live stream. So thanks for being here. Catch you at the next one.